Let's analyze Nvidia. Is it time to buy? Is it time to sell? Is it time to hold? Here at the Rutherford Report, we dig into the data to find out. As always, hit that like button, subscribe, and click that bell notification. Next, click on my channel bio, follow my link to discover the best investment to buy now. How do I know what the best investment to buy now is? I watch where billionaires move their money. And the people who subscribe and get on my newsletter will be the first to find out what I uncover. Don't miss out. Go to rutherfordwealthreport.com. Real quick, before we get into this, I am not a registered financial advisor. Do not listen to a guy like me. Statistics say you will lose all of your money. So the very first thing I like to do when I look at any investment is I ask myself, what are the billionaires doing? So I've got this list of super investors who have filed F-13s with SEC. This is if you manage over $100 million, you're required to file. The problem is there are 3 months and 45 days delayed. So in this video, I'm going to answer the question by doing a little research into, is Nvidia a buy or sell right now? Well, first of all, there are some billionaires who are investing in this stock, and one that sticks out to me is Daniel Loeb from Third Point Management. He recently bought Nvidia and made it 2.5% of his portfolio. A massive buy because he's putting in so much money. Like, it's a ridiculous amount of money. Right here, he's put $150 million into Nvidia. So you know that when he invests in something, he wants to be right. And why do I say that this is something of interest? Well, doing a little research on him, well, he launched Third Point Management in 1995 with $3 million from his friends and family. And he grew it into a massive hedge fund that made him one of the richest hedge fund managers and traders in the world, right here according to Forbes magazine in 2013. And his record is phenomenal. Right here, from December 1996 to December 2015, over a 10-year period, he returned 16.2% per year, which is fantastic because if you think about it, the market average is just under 10. 9.86, something like that, just going off my memory. So this is almost twice as much. Not quite twice as much, but clearly a 6% outperformance, which makes me say this is a guy to pay attention to. So now the question becomes, is it a good buy now? Let's dig into the 7 factors that I look at. The first factor I look at is profitability, because when a company makes money, I'm going to make money. So I found this handy dandy infographic. This is just going to help us visualize how Nvidia makes its money. Is it profitable? Is it not profitable? Well, Nvidia happens to be incredibly profitable. This graphic is a little old, but it will give you a visual representation of how Nvidia makes its money. Data centers, that's it. You can see it's got gaming, it's got these other little things, but it's all data centers. Data centers just drives all of its profit. And here is an updated data set of its profit. And you can see in Q1 of fiscal year 2026, for whatever reason, they're calling this quarter here, fiscal year 2026 Q1, just because of whatever year they're running their accounting on. Well, the data centers is smashing it, $39 billion, and they're expected to make $44 billion. I believe this is their trailing 12 month, something like that. No, that's not, because their trailing 12 month is even higher. Well, this might be, yeah, no, this is their revenue, but this is quarters. Yeah, because their total trailing revenue is like 150. My point here to look at all of this is that the data center is clearly the only thing that matters, but boy, are they profitable. See, let's look at their strong cash flow generation. So they're expected and estimating for this year, they're already at 26, and I'm guessing they're going to go higher. Last year it was $60 billion in free cash flow. And why is this so important? So this is important to me because anytime I look at a company, I want to know, is it profitable or is it going to go bankrupt? So if last year they made $60 billion in free cash flow, they're already up to $26 billion, and they're probably going to take out the $60 billion no problem if this is only Q1. Well, that tells me that if I quickly look at their long-term debt, guess what? They've got $8.4 billion in long-term debt, and they just made a ton of money. There is no chance of, I shouldn't say no chance, it is highly, highly unlikely that unless there's some Enron stuff going on, Nvidia is not going to go out of business today. They could pay off their debt right away with the amount of free cash flow that they're generating. And let's not forget their revenue. Their revenue has increased a staggering 69% year over year on the quarter. So yes, this is the quarterly revenue, $44 billion. That just goes back to the chart that I said before. It was quarterly, and their trailing 12-month revenue was $148 billion. There are only a few companies on the planet that can command this type of revenue, so it's definitely something that I'm paying attention to. And if we look at this chart, it is the type of chart that you want to see up and to the right at really an exponential rate of return. It's fantastically amazing. They grew revenue 69% on quarter, 77%, 93%. And you can see before the AI boom, while they were starting just to build smaller data centers, because ChatGPT didn't really get released to the public until I believe 2022, they were just cranking 50%, 60%, 83%. So you can see that their chips are fantastically in demand. They're highly, highly profitable. The second factor I look at is economic moat, because if a company has a strong moat, it's very unlikely that their competitors will take the market share and I will continue to make a lot of money. Does Nvidia have an economic moat? Well, if we look at their presentation, they're going to tell you that Nvidia's accelerated computing platform is just fantastic. It's the most powerful and important thing, and you should absolutely pay attention. But is this true? Well, right now, today, it is absolutely true, because they've got all these data centers, they've got all the software, and they're really just capturing the AI market with their superior chips and their software that runs on these proprietary chips. But does that really give them an economic moat? Well, I don't think so, but kind of. That's my answer. And this is really important when we get into the valuation, because I just threw this, why does not Nvidia. AMD, I'm thinking to myself, I said, why does Nvidia have a monopoly? And this is the question you have to ask, because AMD could come out of nowhere and they could destroy Nvidia at some point. And the question I have to ask myself as an investor today is, do I have a long enough runway to make money with Nvidia or not? See, why does Nvidia have a monopoly? Well, they've got an extremely high market share. 90% of the market is using their chips. At least that's what this is telling me. And I'm not trying to get very specific. I'm just trying to paint this with a broad brush and then do the bottom-up valuation for the math to guess if I can make money or if I can't make money. Because everyone wants to predict the future. And if I'm going to do a discounted cash flow model, that just assumes that things are going to work. And as someone who's been in business, that I can tell you things don't always work. Now, to me, when I'm looking at this to see if Nvidia has a moat, well, they've got the chips, they've got the software, but really what's so powerful and special about Nvidia right now is that they had a first mover advantage. The problem with first mover advantage is the same thing that happened to companies like AOL and Netscape. Well, they seemed great, they had first mover advantage, but first mover advantage does not guarantee long-term success. It does, however, guarantee short-term success. So if I want to invest in Nvidia, I want to make sure that I'm getting it at a price where I can at least achieve short-term success, because personally, I don't think they have the biggest moat that everyone thinks they do, because they're essentially selling chips to data centers and the software. So as soon as someone comes up with a newer chip, well, then maybe the king won't be the king anymore. The third factor is growth potential, because as an investor, I'm not buying the past, I'm buying the future. So I need a lot of growth potential to continue to make me money. Where is all the growth going to come from that is really going to propel Nvidia forward? I'm talking about in the immediate term. So as an investor, I can make money. Well, Trump announces private sector $500 billion investment in AI infrastructure. So if you're going to make more AI, guess what? You're going to need more data centers. It doesn't take a rocket scientist. It doesn't take a team of analysts to figure that out. It takes just a little common sense. Sometimes Wall Street doesn't have a lot of common sense. So if our government is going to put $500 billion into AI, that's a lot of growth. Another article that I found, Nvidia to send 18,000 AI chips to Saudi Arabia. Well, if Saudi Arabia is going to buy 18,000 AI chips, guess what? There's going to be some growth. Now, of course, we got the hyperscalers. We got Microsoft plans to invest $80 billion on AI-enabled data centers in fiscal 2025. So that's this year. This is coming from January this year. So this exact year, they're planning to give Nvidia a large chunk of $80 billion. That sounds pretty good to me as an Nvidia investor. So there, of course, is tons of growth coming right now. But the big question is, what's going to happen in the future? And will we get to the future? The fourth factor I look for is alignment. I need to make sure that management isn't screwing me over as a shareholder. So to understand if I'm aligned with the company's management, I want to look at what are they doing with the shares. So obviously, like many companies in the high growth field, they issue themselves a lot of stock and then they sell it instead of paying themselves huge salaries. So you can see that consistently, everyone at Nvidia gives themselves stocks and they sell it into the market. I don't really see a change here. Like, I don't see that they're selling more stocks than they did a few years ago. Like from January 2019 and onward, they did a little bit more than like 2015 to 2019, but it doesn't look anything out of whack to me. And what's most important is who's leading the company. So Jensen Huang, or Huang, or however you pronounce it, I'm not an expert pronouncer, he's got a lot of stock. He's got 861 million shares, which is a lot. You can see that very consistently he sells 240,000 shares, paying himself $28 million, $26 million, $25 million, and he's paid himself $1.7 billion in sales. So building this company has made Jensen Huang a billionaire. And what's important to me is it doesn't look to me like he's just dumping all of his shares trying to get out. It looks like over the years, consistently, when he needs some money, from 2009 to 2012, he sells a bunch of shares. Then he does nothing for a number of years. Then he does it again. Then he does nothing. Then he does it again. Then he does nothing. Then he does it again. So this seems like a repeating pattern that I'm not really going to pay attention to that much. I do say I like that he started the company, and I love that he owns all these shares, because if he had no shares in the company, that'd be a huge red flag for me, because, well, if the company tanks, it doesn't hurt him. But because he has so many shares, if the company tanks or if the company fails, he's going to be hurt super, super bad. So I can say that there is alignment here. The fifth factor I look for is a strong management, because if you've got an idiot leading the ship, well, the ship's probably going to crash. So we need a strong management that can weather the storm and guide the company to making me more money. I love when there's strong management, because Jensen Huang has founded this company. And if I do just a little bit of research here, I don't think we need to do too much research. We just do a little bit. Well, guess what? He started Nvidia at the age of 30 from a Denny's restaurant in 1993. Now, I love companies that are owner-founder led, because they're like their baby. They want to make it grow. They want to have domination. They want to win. They are the type of person that's going to do whatever it takes to make their company successful. So I would say the big risk here is that he gets old and retires. But right now, today, tomorrow, he's only 62. He's pretty young. He could keep going for a number of years. He's not 80. He's not 90. So, of course, there's some key man risk here. The key man risk being if the key man gets hit by a car, well, then we would have to reevaluate this position. But the key man founding the company, leading it through all of these years makes me say, yes, this is a fantastic thing, and it marks off my checklist of strong management. Because if the manager's strong, he's going to shepherd the company and do what it takes to win. The sixth factor is undervaluation. I need to pay a good price where it's most probable that I will get an amazing or okay return. So to really understand if we're getting Nvidia at a good price, we have to imagine where the price is going to go. Because basically, let's just see what potentially could happen and do some predictions. Because then it becomes very obvious if this is a good buy or a strong sell or a hold. So according to Nvidia, if you want to do your own research by the company trying to sell you shares, they project, according to them, the data center, Del Oro projections, whatever that means, that the data center capex, which is really their business, is going to grow from $500 billion all the way up to $1 trillion in just the next 3 years. Now, I do like this projection. The only thing I don't like about it is it's coming from the people selling me the shares, but I do like this projection because it's only going out a few years. And it's much easier to predict the near-term future than the far-term future, because if I'm looking out too far, well, then it becomes a wild, crazy guess. So let's see what else I've got on here. I've got the analyst page pull up. What does the analysts have to say about it? Because they might know a thing or two, and let's look at their projections. Now, I'm going to value everything in Nvidia off of sales, because right now, since it's a strong growth company, the easiest way to value it is to do a multiplication on times sales. Because when they're growing fast, everyone only cares about sales, and more sales. And if you look closely in their presentation, you can see that everything is measured on revenue. If I go back over here to their quarterly revenue trend, revenue, they only care about revenue. So they're telling you to pay attention to revenue, and that's what everyone is paying attention to. So if we look at the current year, well, analysts expect the revenue to go up 52%. And next year, they expect it to only go up 25%. And this is what you have to worry about when companies get to massive size. Of course, Nvidia has been making tons and tons of money and making sales and more sales, and there are so many data centers. But the problem is, eventually, well, where is all the money going to come from? Because it might be easy to pick up 20 billion here, 30 billion there. And the U.S. government now says they want to spend $500 billion. But where are the trillions and trillions of dollars going to come from that are going to make the math work? And you're going to see what I'm talking about in just a second. So we're going to use this 25 number that the analysts are expecting the sales growth for next year. And just doing a little research to have AI tell me something about sales growth and just substantiate this. Just doing light research here because, you know, if you're going to tell me that data centers are going to grow at exactly 15.2% or 33.4% for the next 10 years, guess what? You're a futurist. You're probably blowing smoke into the air like there is no way to know. So all we're going to do is take a reasonable guesstimation and see if the price is right or if the price is completely wrong. Does it give us a good chance of success? So AI is telling me that they expect the data center market projected to grow at a CAGR of 26.8% between 2025 and 2032. Well, guess what? I love that number because the analysts are expecting this current year's or next year. This year it's going at 50-something%, but next year to grow at 25%. Well, guess what? All of these sources here, AI is linking me all these studies, all of these different things that they're projecting. They're saying 26%. They're saying 27%. So, you know what? In summary, 27%. The analyst said 25, so I'm going to guess we're still in early innings. I'm going to take the number 25 and use that for all of my math. So to do some math to understand if Nvidia is a good price, I want to look at what the market typically pays for a company like Nvidia. Because it's a fast-growing company, we're going to use the price to sales. So if I look at the price to sales for Nvidia, when people are excited about Nvidia, they pay 15 times sales. When they're not excited, they pay 7. And when they get really excited, maybe they pay 26 times sales, and then 11 times sales. And then AI comes out and, oh gosh, 35 times sales, 22 times sales, 30 times sales, 18 times sales. And of course, this gives me a range of possibilities. So I'm going to take that over into my handy dandy calculator and kind of see what is really possible. Now, I put the growth rate of 25% into my calculator. I've also used a range of possibilities from 7 times sales, 20 times sales, to 30 times sales, just to illustrate a range of possibilities. Because if AI goes really, really well, and everyone's got AI and they've got a Tesla bot and everyone's expecting more and more AI and governments have more and more AI 5-10 years from now, well, maybe everyone gets really, really excited and you have artificial general intelligence and everything literally goes right above and beyond your possible expectations and everyone's super excited. Then maybe we're still paying 30 times sales. If you're doing something like that, well, you're looking at 33% per year return over the next 5 years. But remember, that means in 5 years from now, everybody needs to be excited about the future 5 years after that. Now, of course, maybe things just go really well. They go according to plan. And then you're paying something like 20 times sales. Well, that's going to represent a 22.7% return from here. And, of course, on the other side, let's say they don't grow as well as you think. Then they're only paying 7 times sales, and then maybe for the next 5 years, Nvidia is flat. Or maybe it grows a bunch, but then it stalls out. And guess what? We're not getting artificial general intelligence. Your house is not going to have its own data center in it. But one thing I really want to point out here with this growth rate is we start to hit extremely, extremely large numbers, because right here over in column C, you can see right now Nvidia's 12 trailing months of sales are $148 billion. But for us to have this kind of 25% growth rate, by year 5, they need to be making $450 billion in trailing revenue. If they're not going to do that, well, the market is going to price it at the really low end of that range. And if growth slows down at all, we could be in for a big problem. See, look, if the growth rate is only 20%, now, all of a sudden, it's possible to get a negative return if the market starts to turn pessimistic about AI. Say we only grow at 15%. Now you're in a real trouble and you're starting to lose a lot of money. This would be if, all of a sudden, your Nvidia is only making $300 billion in year 5 and it's not growing as fast as you think. Now, we'll just use the analyst's 25 because that seems like it's possible. There's a lot of sources that are saying that. But the question really becomes, how much is the market going to pay for that potential future sales growth 7 years from now? Because for them to be excited about it, Nvidia needs to be making $453 billion. And then they got to assume that the year after that, it's going to be making another 25% on top of that, so $500 billion or more. And the numbers just start to become staggeringly large because there's only one place that type of money can come from. It's got to come from governments and more governments, and then governments need to buy even more because who's going to be shelling out $500 billion a year, then $600 billion a year, then $700 billion a year. Now pretty soon we're going to have to be at $1 trillion a year in data centers. So you have to ask yourself, how long can the party go on for? I'm not saying that Nvidia is going to crash and burn here, but I am saying based on just how outrageously large these numbers need to get, I'm not sure if it's realistic to get anything like a 30% return or even a 22% per year return from here. If we're lucky, we won't lose a lot of money. But the law of large numbers just makes it seem really difficult to me to think that this is going to be an extremely high-performing stock from here, because remember, we got to have $500 billion in revenue in 5 years, and then the market has to expect someone is going to come up with like $700 billion in revenue in a few years after that. The seventh factor is sustainability, because I don't just want to make profit today, I want to make profit tomorrow. This is the $1 million question. Will the revenue growth be sustainable? Because you know what? To make a lot of money, it needs to be sustainable for the next few years. And then in the next few years, there needs to be the perception of continued sustainability. And you can see by how high the numbers can get, how many hundreds of billions of dollars you need. There's only one place that all this money can come from. And you know what? Nvidia is already marketing it to you. It's sovereign AI. All these nations are going to need data centers because they're the only ones that can really spend these hundreds of billions of dollars. Sure, Nvidia can pick up $20 billion or $80 billion from some of these different companies. We've seen that Microsoft is going to shell out $80 billion this year. But for AI to continue to grow, the data centers to continue to grow at a rate that makes that higher end compounding possible, we're going to need many countries investing $500 billion, then another $500 billion, then another $500 billion. And that's what is only going to be possible to continue this crazy run that Nvidia has had. And I'm not saying it's going to fall off a cliff. I am not saying that it's going to be a terrible investment here, but I'm also saying at this price, I need to be prudently cautious that a few $1 trillion in data centers needs to be dumped into this thing in the next 10 years. The next 5 years are easy to see, but the 5 years after that, to continue that kind of compounding, it's such large numbers, we're going to need governments to step up and step up big, just like this. Well, Trump is announcing a $500 billion investment with his, what was it called? It was like the Stargate plan to construct 20 data centers. So he's going to need to construct 20 data centers, and Saudi Arabia is going to need to conduct 20 data centers, and China is going to need to be constructing $500 billion worth of data centers. But oh wait, guess what? Here's the report from the New York Times. New rules restricting sales of AI chips to China. So I don't know how many sovereign countries can be investing $500 billion in AI over the next 10 years. But these are the type of numbers we're going to see if you want to see 25%, 30% returns from Nvidia. So that's what I'm looking at when it comes to the sustainability. Now, there's one other important factor to consider that most people are not considering, and this is the Apple effect. This is the effect from indexing. I think that Nvidia is a company, and as a stock that continues to grow, there's a lot of stability coming from a different growth factor that a lot of people are not thinking about. This is the Apple factor. The Apple factor is that Apple's so big, it doesn't even matter. Because if you look at Apple, over the last 1, 2, 3, 4 years, and I'm just looking at their annual income statement, it's practically flat. And their net income is practically flat. But look at their share price. Their share price has gone up 150%. And the reason for this is because of the indexing effect. So everyone in the world who puts money into an index, and I'll show you what I mean here. Here's the Vanguard S&P 500 index. And we go over to its holdings. Where are its holdings here? Portfolio composition. Let's go. Oh, come on. Oh, this page is breaking. Let me refresh it real quick. All right, there we go. Down here to the holdings. So the holdings are, where are my holdings? Portfolio composition. And here we go. All right, here it is down here. Apple is 6.75%. Well, guess what? Nvidia is so large now that it's 5.64%. So every time a person puts money into the index, let's say you put $100 in the index or $1,000, we'll use $100 for round numbers. Well, $6.75 go into Apple. You know what? Now Nvidia is so big, every $100 that you put into an index, $5.64 goes into Nvidia. So this means every financial advisor that's advocating index funds, every millennial that's plowing money into index funds, all of these index fund investments are plowing money into Nvidia. So this could create a situation where Nvidia continues to go up, even if their revenues and their profits plateau. But also that could not happen, because I believe that Nvidia is a one-way bet on more and more AI. And you're going to need governments to be shelling out all of this money on AI. And of course, I think there are fantastic prospects for Nvidia in the future. But I don't necessarily like this price just based on the large numbers. In conclusion, I don't think this is the best opportunity in the stock market. It's, for me, more of a hold, let's wait and see. I would love to back up the truck if the price was significantly lower. But just based on the math here, we're going to need to see different governments investing hundreds and hundreds and hundreds of billions of dollars for this growth, the growth rate to continue, and have the perception that the growth is going to continue. Where is all the money going to come from? Now, I'm not saying that the money isn't going to appear, but there are only so many countries that can invest this kind of money. It's certainly possible, but the risk to reward scares the crap out of me here. I feel like this is a one-way bet on AI. The risks are very high. If things turn out really, really well, then investors are going to make a lot of money. But from here, if they just turn out okay, or if the growth even plateaus or slows down, if we don't get a strong index effect where people are just bidding up the stock, things might not turn out the best. So I don't love Nvidia at this price, but it's certainly very interesting. Leave me a comment. Let me know. Are you buying? Are you selling? Do you see better opportunities? And next, I want you to subscribe, because I'm going to be putting out more amazing stock analysis videos. And if you like this, leave me a comment and let me know if you want me to set up a Patreon where I just share my personal portfolio and I share the best investments I'm seeing in the stock market right now. Let me know, subscribe to this channel, and I'll see you in the next analysis video.